All right, guys. So, nice. Okay, thanks, man. All right, let's just start with the Fed, right? It's pretty interesting because the market, it's more tilted now. How can I say that? Well, I would say tilted, yeah. The market is more tilted. It's more predominant towards what the Fed will do in the next meeting, right? We had last time the Fed pausing. It wasn't any surprise, I would say. It was just that, you know, they think that the higher rates are working. Okay. Unfortunately, we don't have the US 10-year yields. So what I will do is we will go to trading view, and then we can go and have a look on the 10-year and the 2-year yields. Why is not on my that's strange. Let me just log in here. Okay, so if we go to 10-year yields first, we can see that there is a rally, and right now we are pricing at 4.74%. And the 2-year yield is at 5.10%. Okay, 5.1%. That's the daily. Let's go for the 4-hour here. What's the most important thing that it's sort of predominating the market right now? The Fed came up and say on the minutes, you know, if you haven't read the minutes yet, I've made a video on our ACY Securities YouTube channel. You can just go there and search it up, where I read the minutes from FOMC. But what they've basically stated is that if the yields, if the government bonds, you know, the 2-year and the 10-year, come lower, you know, keep going lower, that was basically what it was happening, then there's no need to hike the rates anymore, because then they think that the rates are actually working on the way that they, you know, they predicted that would, and it's controlling inflation, and it's doing quite well. Even, you know, we had a higher inflation on the last numbers. If we go here, we can have a look on FinLogic's economic calendar. Just a second. And we can see that we had a higher inflation than expected, right? Even with higher inflation, we had the Fed quite, you know, of course, they acknowledge that it's higher than expected. They acknowledge that the inflation is too high and they have to control it. But still, they are sort of tranquilize it. They're sort of okay with the inflation where it is right now, because they know that the high rates are working on the favor, and they thought it would work, controlling the inflation. Okay, so I think it was last week on. Let's go like that, and we can see. Just a second. What about if I search CPI? There we go, German CPI, US CPI here. September. This one. Okay, so we had a prediction forecast as 3.6%. So, you know, the consensus is basically all economists around the globe, all the biggest institutions around the globe, they look at the market and they do a forecast. And this forecast comes to the media. And then most of was predicting at 3.6%. Okay. So then someone is drawing here. Just please, guys, don't do that. Others, can you just delete this drawing, man? I would appreciate that. Anyways, so as I was saying, the forecast was at 3.6%, right? And then the previous was at 3.7%. So basically the actual came as the previous. So it didn't have any change, but it came higher than expected. Okay. So when it comes higher than expected, the CPI, when the CPI comes higher than expected, then we're going to have a stronger currency. And that basically what happened on that day. So we can see that there was on the October 12th, someone sent, sorry about that, not a problem, Abbas, can you just delete the drawing? If you could, please. Otherwise, let me stop share the screen and share again. So that should resolve the problem. All good, not a problem. Thanks, man. No worries. All right, coming back here on the October 12th, we had the release. So if we go actually to the US dollar index, we can basically see on the 12th, that was exactly here. So let me draw here a box, just a second. Here, if we see, oh, we're not going to be able to see. There we go. If we see all this high move here was made because of the inflation higher than expected, right? So this is the power of a news, especially, CPI as the biggest, one of the biggest news can have on the market. Now, the big thing is that the market is sort of, the Fed is sort of okay with this higher inflation at the moment. All right. So what basically, the target of inflation on US is between 0 to 2%, or 1 to 2%, around those numbers, no more than 2%. So they still have 1.7% of inflation to reduce. Okay, and this, it's not much. So they don't have to hike rates any aggressive as they were before. Remember when Fed was, okay, another meeting, another 25 basis point. Next meeting, another 25 basis point. Next meeting, 50 basis points, 25 basis point, and so on. So they were pretty much very aggressive towards the monetary policy. But now, as we are approaching, they still, they still stating that, yes, we have high inflation, but we are controlling. Inflation is under control. And to be honest, quite fair, they're doing a pretty good job. Okay, they're doing a pretty good job. They came all the way, if we look at the history here, the peak was at around 9.1% of inflation. Okay. And they done pretty good. So they've reduced already 6%, 6.6% of inflation since July last year. So 1 year and 3 months, they've reduced 6.2%, 6.3%, something around that. So it's pretty good. They're doing a pretty good job in 1 year, reducing 6% of inflation. Now, are they done? Definitely not. They're not done yet. They still have work to do, and this is what they've been stating. Okay. When the Fed says that, they are quite neutral to hawkish. Let me sip of my water here. They are neutral to hawkish. What does that mean? Well, if we go to FOMC, FOMC minutes here, we can see this is the minutes. I'm gonna put the link on the chat. It's a safe link, guys. You can click it on. So I'm gonna leave the link on the chat so you guys can have a look after we finish. But they pretty much stated all on here. I'm not going to read all of that. There is a video on YouTube channel. I've mentioned this already. That they have pretty much controlled inflation. If we come to here on September, on the statement, not on the minutes, on the statement, if we come to PDF, it's a shorter version. And we can see here, recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have slowed in recent months, but remaining strong. And the unemployment rate has remained low. Inflation remains elevated. So they state that inflation remains elevated. And then, of course, they say that the US banking system is sound and resilient because, in the beginning of the year, I think it was January, February, March or April, there was all of those banking crashes, out of liquidity, and so on. Tighter credit conditions for households and business are likely to weigh on economic activity, hiring, and inflation. As well, the extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. In support of these goals, the committee decided to maintain the target range of the federal funds rate at 4.2%. The committee will continue to assess additional information that its implication for monetary policy in determining blah, 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 blah. So what they basically say is, in assessing the appropriate stance on monetary policy, the committee will continue to monitor the implication of employment. The committee would be prepared to adjust the stance of monetary policy as appropriated if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings of labor market conditions, inflation pressures and inflation expectations, and financial and international developments. So basically, on this last paragraph here, we can see that they are ready to raise rates if inflation continues to go higher, right? Because they say here what they will take in account, the committee's assessment will take into account a wide range of information, including readings of labor market conditions. As we could see last Friday, it was very strong. Not last Friday. Last Friday it was not last Friday, 2 Fridays ago. It was very strong. Inflation was, higher than expected. Inflation expectation is still to be higher than expected. And financial and international developments. International developments, it's going to be very nice to see how they will approach it, because we had the next meeting in November, because we have the war in Israel that I want to talk about this as well later on. But pretty much, I think what's going to happen is there's 2 options for me, and only 2 options in this scenario, I would say. Okay. First scenario is that the Fed hike 25 basis points next month. Okay. That would be the first scenario. The second scenario is that they keep the rates unchanged. So they pause the rates again next month in November. But if they do that, then they hike in December. Okay. So there's only those 2 sort of options in my mind at the moment. Because if we think about it, we have high inflation, we have higher employment. We're going to have a look tonight. We have, let me go here on the economic calendar. Just a second. Economic calendar. And then we're going to go today. We can have a look at, we're going to have at 11:55, we're going to have retail sales. Oopsie, shouldn't have clicked on that. We're going to have retail sales, okay, as well as, where is it? Yeah, 11:30. Sorry, guys, 11:30. I don't know why it was 11:55. That was strange. We're going to have the building permits as well. Is that? No, that's wrong. Here, yeah. We're going to have retail sales. We're going to have the United States Red Book, but this is not much. And those 2 are not much as well. The only thing that I want to see is the retail sales. Why? Because then this counts as an inflation expectations for next month. Why does this count for inflation expectation next month? Does anyone know? Why can we have a look on the retail sales to define if inflation is going up or down? Well, it's very simple, right? Basically, if we have higher credit giving out to people, then what's going to happen is people will spend more, right? Someone sent a message. Let me check. If retail sales come higher than expected, we expect inflation higher. That's correct. Why? Because if there is more credit given to households to spend, right, they will go and spend this money. When I mean credit, I mean money. Credit. When someone gives you credit to buy a property, they give you money. Exactly, that's the measure of the consumer spending. If someone is spending more, the economy is, it's receiving more, then it will have a higher inflation, because what the Fed was trying to do is control you to not spending, so then inflation don't go up. And if we have a higher reading here, we can expect a higher inflation next month. And then if we have a high inflation next month, we're going to have a hike from the Fed either next month or in December. Okay, so this is pretty much what I'm basically expecting from the Fed, given the scenario right now. Everything can change, everything is very volatile at the moment. And keep in mind that macroeconomics and fundamental is something that you have to do now to, sort of predict the future. But something can happen now that will, your predictions won't be right, so then you have to redo it. So it's a constant analysis, but that's my analysis for the Fed. Now, let's talk a little bit about the Israel war and what is happening over there. I've mentioned this last week. Again, I'm going to mention it right now. I don't want to be, in one side or another. I would be neutral towards this this subject. I just want to express my analysis towards the war. But don't you think that as long as bonds keeps that bearish bias, the Fed will keep pausing for the coming month? Yeah, exactly. If the bonds keep the bearish, if bonds keep going down, then the Fed will pause. But as we can see, it's not happening right now. It was happening on here, but it's not happening right now. And we can see the 2-year and we can see the 10-year as well. If it loads, would it be good? Okay, you don't want to load. Anyways, so we can see the 2-year and the 10-year, both of them, are not going down, they're going up. So then, of course, the Fed will have to hike. And I completely agree with you, man. If the bonds keep that bearish bias, but they are not at the moment. So that's the only thing I've included on my analysis as well. Now, on Israel, basically this weekend was a very intensive weekend over there. We had we have a lot of things, but pretty much the outstanding ones was that it's escalating the war. Okay, so it's getting a bit more, I would say, escalated than it was before. But the only thing that haven't made the market, have a higher US dollar at the moment was that the Iran haven't pronounced itself that they will invade with Hamas. So, we have higher gold prices, we have higher oil prices, we have a somewhat strong US dollar, but nothing compared to the Swiss franc that last week was the best performer, and then it was Swiss franc, and then US dollar, and then CAD. So those three currencies was the best performance last week. But pretty much US have sent another another ship to Israel. And then right now, what is basically waiting for happen is Israel invades, by those troops, Gaza. So when does that happen, that will, I guess, it will have a higher impact on the market, because then we're going to be actually in a physical war and so on, so on. So I think we can have a higher impact, probably this week or next week. But we don't know. We don't know. They don't know as well when there's going to be the next phase, as Israel have said multiple times. Okay, so I've addressed my thinking about the Fed. I've addressed my thinking about Israel right now. Does anybody have a questions on those two topics, or can we move on? As we wait for you guys, I'm going to go for US dollar index right now. But we have move on. How do they affect gold? Good question, Abbas. Definitely we'll talk about gold, as well as energy prices. Someone have asked me about energy prices, and then I will talk about gold in the end as well. So let's start. Let's start with the US dollar, right? So basically, we had last week a pretty good week, I would say, for the US dollar. You know, of course, because of the CPI, and it was somewhat, we can see, you know, strong, but then we've just gave it back a few percentage, let's say 0.5%, 0.4%, around that. Do I think this US dollar strength will continue? Definitely, I think it will continue. I guess we can see a much stronger US dollar this week and next week. So the US dollar has commenced its dominance in the currency market of late, with inward money flows based on the yield. With a 5.5% return, safety and the risk aversion as well because of the Israel war. Economically, the US dollar has many reasons right now to invest. With continued strong economic data, you know, we have seen all the economic data last week being stronger than expected, such as the inflation, the employment, as well. The business, we continue to see, you know, that the DXY shows strength despite traders. They expect a pullback. You know, everyone is expecting a huge pullback. So we have this huge 10 days pullback, and then we have this upward movement now, and then everyone is expecting that we continue to go further down. I don't think we continue to go further down, to be honest. Even funds, you know, I can show you guys an image later on after I finish my analysis here. A few funds have changed their positions from short to long positions into US dollar, right? So the commitments of traders, the report that I've showed you guys last week, I think it was last week? No, I think it was 2 weeks ago. I've talked about the CFTC, that's the Commodity Futures Trading Commissions from the US. Now we can see that they have collected all the orders, and we can see that most of the leverage funds have changed the position. They have flipped from negative to positive. So that means that they're now buying US dollar. Okay. It's unlikely, okay, unlikely, nothing will happen or it won't happen. It's unlikely at this stage that another interest rate hike will occur. As I've mentioned for you guys, I don't think it will happen now, you know, next month. I guess if it doesn't happen next month, it happens on December. If it happens on November, it doesn't happen on December. But there's only one more to go, okay? If the US Treasury yields continue to rise, much of the work, you know, work of the Fed is now less important than it was before. A pause at November meeting is the highest probability outcome right now, okay? Maintaining rates at this, I would say, restrictive level for a long period of time, it has become the lasting, you know, that has become the thing on the Fed right now. Without any interruption, the Fed have, you know, keep saying that we'll pause only if, you know, something out of control happens. This week, we're going to monitor the events in the Middle East. So we have to carefully, as I mentioned, monitor those, the war in Israel with Hamas, to assess the increase or decrease on the risk aversion for those investors around the globe, as well as domestic US data. So we're going to have the retail sales, unemployment claims. We're going to have a few Fed speakers, including Powell. Okay, so it's very important. As well, we're going to have the manufacturing data. Overall, I remain bullish on the US dollar. However, it may be slightly more muted this week prior to the next week's action. We're going to have a lot of economic economic releases on economic calendar next week for the US dollar. So I remain bullish on US dollar. I guess we can have a lower euro dollar. Okay. I guess we can go to the 104 level. So my targets I've been mentioning here for you guys, the 105.5. I've mentioned 105.5, and I've mentioned 105 as well. 105. Oopsie. Those two targets have been hit. Okay. Now I guess we need a close, a close below 105, so then we can go to 104. I've talked about last week. I've talked about the somewhere around parity, somewhere around 1. I don't think it will happen anymore. So my last target for this year would be 104. Then we have to see what we do once we arrive there. GBP USD as well. It's a nice short position until 125. Not 125, 120, and then 5. 120 and 5. So that would be my target. I guess, if we have I close again below those lows here at 120, 500 and 120, then we can go to the 118. That would be my last target for this year. Remember, guys, we are approaching the end of the year. So this is quite important right now, as we're starting a new quarter next month, next year in January. So things are getting pretty quick at the moment. So just watch out for the datas and so on. So definitely euro dollar is my favorite, as well as pound dollar. If we look at, let's say, AUD USD, not quite looking to short this pair at the moment. But if your strategy lines up, that's good. Someone sent some, let me check here. If Fed doesn't hike, don't you think it would be better to switch to CHF and JPY along with gold? We may see a less strong USD until a hike. Yeah, that could be also true. Also, as long as US has got a strong dollar, resilient economy, and strong labor market, what's stopping them from hiking? Okay, and what about 102? All right, so first of all, let's address here. I don't know your name, so I'm gonna call you as iPhone. If Fed doesn't hike, don't you think it would be better to switch? Definitely, it would be 100% better if you're not right now on CHF. We can see, as I've mentioned prior we start, CHF last week has been and will be as well this week the best performer. Okay, once we have those things happening around the globe, CHF is always the first one. Stable economy, lower rates, lower inflation, very well controlled economy. Definitely it's good. JPY, definitely not. We're gonna have a very, very, undecided Bank of Japan right now. If we look at USD JPY, it's very muted what's happening on USD JPY at the moment. After we had the hit at 150, let me put it here. After we had the hit on the 150, the Bank of Japan have made the intervention, and then they sold the US dollars, and then this happened, and now the market sort of just shrinking the way, but it doesn't go over there anymore. I wouldn't like to have this on my portfolio right now. But CHF, yeah, CHF, nice. I wouldn't trade against US dollar as well. I prefer to trade Euro CHF, GBP CHF, CHF, CAD CHF, and those types of things. CAD as well is it's a good opportunity to have on portfolio at the moment because it's a currency linked with the US oil. As well, WTI, Western Texas oil as well. And gold, yeah, definitely gold on those scenarios are really good. We may see a less strong US dollar into a hike. We may not. The US dollar is driven by economic factors right now. Definitely about Fed speakers. So we're going to have a lot of Fed speakers, and this will lead to investors thinking about, they will do this on that. Longer as US has got a stronger dollar, resilient economy, and stronger labor market, what's stopping them from hiking? Because they've reached the dot plot. So they have to follow the dot plot. The dot plot has been hit. So they can't just come here and, okay, we're going to adjust the dot plot. And definitely what have they said and what have they stated, as I've mentioned before, was that it's working. The higher rates is working, and they don't think that there is need to hike the rates anymore. So they need to see those accumulated of factors happening, so then they can take further actions. Okay. What about 102? As I've just mentioned, 102 for me, yeah, I don't think we're gonna have 102 anymore. I had a target at 102. I'm just not keen anymore to the 102. I guess more towards 104, 105. If we had a close below 105, then we can go to the 104. ING has a target at 104. HSBC as well. Goldman Sachs has 105. JP Morgan has 105. If I'm not wrong, yeah, those would be the ones. Okay, next, let's talk about euro. Okay, euro dollar. We already here. Okay, the euro has come off a lower performance last week, which can be attributed, to many ECB members commenting on the peak of the rate hiking cycle has been reached. So most probably, most probably that ECB won't hike rates anymore. Most of the guys from ECB board have been dovish on those comments. So there's another opportunity on Europe to short the euro. Although it has weakened significantly, it is still performing rather neutral, I would say, across other currencies. With economic data continue to show further signs of weakness, I can expect to see the euro lose strength, I would say, further as we move towards the close of the trading year. Again, we are on a very, very important month, next month and December. This month is more towards data, and next month will be very important for us. So we need to pay attention. We are very close to the end of the year. So just bear in mind, we may see the market a little bit stagnated, but definitely we can have few opportunities over there. With the risk sentiment focused heavily on risk off at the moment, we will continue to see the monetary outflows from euro into safe havens, such as like the US dollar, the JPY, the CHF, definitely another one, gold, oil, and so on. If the euro presents retracements against the stronger currencies, I would definitely be looking to capitalize on those as short entry positions. Because right now, tonight, we're going to have, I'm short on euro dollar and I'm short on euro CAD as well. Where is euro CAD? Here. So I've entered this position here live with you guys. I think it was 2 weeks ago, something like that. Well, the market went up. and then now it's coming back again. Am I afraid of that? Definitely not. I'm not afraid. I know, I know where the market can go, and that's it. You don't have to be afraid when you have a strategy, a set of rules that you just do every time the same thing and you get the same results. Let me grab my water here pretty quick. So what I mean by that is, if you only lose, and you follow the same thing every time, you know the result, you're going to lose. If you win, it's quite impossible, but if you follow these steps again, you're going to win. So you have to understand what you're doing wrong, so then you can understand how to proceed towards your strategy. In my strategy, I've mentioned for you guys, but I want to do a webinar towards my strategy and how to have the approach towards the market, on how I get the approach towards the market. Anyways, I use mental stop loss on Eurocard. No, not mental stop loss. My stop loss would be if the market comes higher than this point here, because right here, right now, we have a nice resistance area. So I'm kind of just waiting for the market to break down those lows and go to the 140. There's a few banks on the 140 waiting for 140. I think it's HSBC. Who else? CIBC and Goldman Sachs, Citi as well. Actually, I was reading a bank statement this morning from Citi. I can show it to you guys, that they prefer. Let me show you pretty quick. Let me just stop sharing my screen. Let me grab it here. They prefer to express CAD longs against GBP as well as euro. So where are these? Let me check just a second. CT, I think is this one. Yeah, that's this one. Let me share my screen again. Save. Where is it? Where is it? Zoom here. Okay, there you go. So this is from Citi. We can see Europe open, blah blah. Where is this? Here. So on euro, the Citi's euro terms of trade index had the largest weekly drop since August 2022. Last week, with energy prices the key driver. Okay, so another thing is that I want to talk about the energy prices. No, I don't place my stop losses. I don't. Fui Hong asked, sorry if I pronounce your name wrong, if I could review the natural gas. So the energy prices basically have been the key driver of euro last week. A prolonged conflict may add energy to euro risks. On top of soft growth outlook, barely blah, blah, or spot desk first like long CAD versus euro and pound. Okay. So CT is long on CAD, short on euro, and short on pound. If we go and have a look on here, so euro CAD, that would be one, and GBP CAD. Where is GBP CAD? I don't have here. No, I don't. Let me open. Okay. You can see that they're pretty much, short on those two pairs. If I'm not wrong, someone had a target at 165. I think it's HSBC at 165. So that's definitely a nice trade to have on the portfolio as well. Okay, so I've talked about euro, talked about dollar. So again, my bias on euro is short. Okay. Let's move on. Let's go for pound now. Let's go GBP USD. Okay, so the pound has pulled back against many pairs. Has a few institutions has unwinged short positions from the mid-August. Towards the end of the last week, we saw myriad of poor domestic economic data, which led to the GBP losing its strength against most of the G7 currencies. This week, I'm going to look ahead to the unemployment data that basically came in unchanged today. It came unchanged for me, but that was pretty, I couldn't understand pretty much, because on my app it was saying that it would come at 5 and then suddenly disappeared and it came at 6. So let me have a look again if it's right, so we can proceed. Calendar today, pound unemployment rate. Yeah, it didn't appear it again. I don't know why. Probably some missed data from Bok. Anyways, coming back. So we're gonna have, hopefully we're gonna have this data because it's a very important data. I have to check if they haven't changed the day of release. But anyways, and then we're gonna have the CPI as well and the retail sales. Okay, so most of the important news from pound. Overall, all economic data is expected to cool, so we remain, I sort of remain cautious for upside surprises. However, if this occur, I would, temporarily, it would just be a temporary boost on the pound, and I would be more likely to short higher prices on GBP USD. I remain, very bearish on the pound. I'm just waiting for a good opportunity to get involved on the short GBP USD, and we'll, most likely GBP USD, GBP CAD, and GBP CHF. Same as CT have been looking at GBP CAD. I'm looking at GBP CAD as well. GBP USD already gave my target 1.25, and the GBP CHF that I don't have it here again. GBP CHF. Why GBP CHF? Well, because CHF has been the best performance last week, is a safe haven currency, and the pound is just losing strength. So I guess it's a good opportunity as well. I don't have targets here, but I think that if we kind of work our way here, we could definitely find some good entries. Let me see the messages. What is your reason for not placing your stop loss? There are a few reasons. So when you're working towards, I can show you how I don't use my stop loss, but I definitely don't suggest anybody do this. It's on your own risk. Anyways, so basically when you are towards economic factors, right? When you are analyzing an economy, it won't reflect in the market right now. It won't reflect the market today. If something happens, it won't reflect the market in the same minute. It may take 2 days, 3 days, 1 week, 2 weeks to start happening. So I'm more than happy to take this drawdown because I know that on the economic factor way, it's happening. I don't care about order blocks. I don't care about support resistance, this and that. I'm not saying that I don't use it. I do use 10%, 10 to 15% of my trading strategy is using those key levers to understand where I can place my positions. But everyone has your own methods. Anyways, so this is pretty much the reason why I don't use stop loss. I was using before. The way I used to use stop loss was with the average 2 range, the ATR, just looking around the volatility of the market on the daily basis and placing the stop loss above the volatility market. Anyways, for euro, dollar, and pound, where would we put our stop loss? Again, man, this is your work. Can't help you with that. What is your risk to reward ratio on euro CAD since your stop loss looks significantly greater than your TP? Again, My TP I've mentioned on EuroCAD is 140, right? So here, my take profit was here, but I just need to drag it down. And 140 is my my main target, and my stop loss is around this level. So definitely 122, 1.8, somewhere around there. Let me check. I guess in order to get those snapshots from CT or other banks, you have to be a subscriber. Yes and no. That's a good question, Lawrence. I get asked a lot of times. You have two ways. You can subscribe to, dark websites, or you can just have someone to send you out those researches, or you can sign up for some, A1 Edge Finder. I don't think A1 Edge Finder has it. EFX Data has it. PMT has it. Yeah, that's good. PMT is a very, very good, very, very good too. I used to work with the boys out there. Very, very nice. AUD USD, I'm going to have a look on AUD soon. AUD might be looking for 2022 low around 162 level. Yes. I think it was CT that has a target. No, it wasn't. It was Westpac. Westpac who has a target at 162 level. I can show you later, Santi. PMT, what about GBP average earning index? We're going to get there soon. All right, next one. Let me go for JPY. Let's go USD JPY. Okay, let's go 1 hour. Okay. So the yen remains weak. Still, it is a safe haven, but remains pretty weak, despite recent volatility around the 150 level. The story remains much same for USD JPY and especially the JPY. Overall, the economy is weak. The data continues to disappoint. So on and so on. So again, this is why I've mentioned for someone later on that I don't prefer JPY. I prefer, let's say, CAD over JPY. With the, having this in mind, we must remain vigilant. That the talk of the policy, the YCC, may change. It's becoming more and more persistent, and quite frankly, I don't think they will do it this year, to be honest. It's my opinion. Okay, we haven't seen inflation any higher and higher as they're expecting in Japan. But anything is possible, right? Bank of Japan can just come in. Okay, are we going to do that? Well, that would be very tricky for the economy, but I don't think it will happen. But when it happens, then definitely USD JPY and a few other pairs would be a nice short position. Combine it, as a safe haven status, the yen has during those times of conflict may serve to boost these conflicts may serve to boost the yen as we towards the end of 2023, 2024, starting 2024. Any short-term strength increases on the yen. I see that it's better to be away from those short-lived strength, and I still prefer to maintain my portfolio out of JPY, and would prefer to assess CAD in terms of, if I choose between JPY and CAD, I would prefer CAD over JPY. So I don't have much to talk about USD JPY. There are a few, banks talking about 150, 155. Well, it can happen, but it's just not, what about if we are long on here and then they come and then I put 155. And then Bank of Japan comes in and do another intervention, and then it goes down again, and so just not my preferable one. I have a trade idea for AJ, but I need your point of view. If I see UJ touch above 150, Bank of Japan may intervene, and at that time I may take a sell in AJ and JPY. Okay, so you're basically using USD JPY to see how Bank of Japan will intervene and give a short-lived strength, or then you take a trade on Euro JPY and GBP JPY. Is that correct? I like when you guys interact, so that's good. All right. All right. So this is a very tricky situation right now. I can't give an advice, but in my so in my in my personal view, in my trading account, I would not prefer to do that. Okay, because in my view, in my opinion, when we're using USD JPY as a main currency, so then we can trade the short-lived strength, as I've just mentioned. It's let's have a look on Euro JPY. Let's have a look on here just a moment. I don't have it. JPY. Okay, here, right? I rather prefer long-term growth than a quick boom down, and even if you go sleep or something like that and you'll take profits like here, then you wake up and it's here again, right? So in terms of risk, it's not appropriate for you to do that. Okay. Now, in terms of a quick money, yeah, that's good, but it's so risky that if I come to my boss, when I was working for the hedge fund, and come to them, okay, I want to do that. No, you crazy, definitely don't do that. You're gonna, too much risk, too much variance. What's your delta? What's your alpha? So, in my opinion, just not the best way to do. Anyways, what's your name though? Can't see your name. It's coming up as iPhone for me. Yeah, I can send you, Lawrence. I can send you the link as soon as I finish here. Okay, let's talk about CAD right now. Yassi. Oh, wait a minute. You have been to one of my previous one, haven't you? If I'm not wrong, or is this one your first one? Yeah, always. Yeah. I know. Okay, let's go CAD. Let's go USD CAD. We're gonna go to your US. Sorry, guys. What's the name? Aussie dollar. We're gonna go there later. Okay, USD CAD. What a big boy here. Okay, so the CAD, it's a very nice pair, and I've been mentioning this since last week. It's showing strength across the board based on a number of factors, right? Higher oil prices based on the supply cuts and the tensions in the Middle East. CAD would be one of the largest benefactors from this situation right now. That, along with USD strength and domestic Canadian data showing resilience, I don't see no reasons for the CAD to weaken within any significant at the present time. I don't see any reason why we can expect the CAD to weakness, as we have those tensions getting much higher, oil prices getting much higher as well. Few predictions going to oil to be $95-$100 per barrel. If Iran comes in and intervene, if US goes there and intervene as well, and intervene in a sense that they participate on the war, then it's going to be very stronger, even more stronger for the CAD. So yeah, very resilient, and the BOC chairman is also sounding hawkish if inflation persists. He's also adding more strength to it. Yeah, definitely. So we're going to see CPI tonight. Okay. In my take, definitely higher. Okay. That's my take. Anyway, so we're going to, as I've just mentioned, this week we will see the results from Canadian CPI. If the data prints remain resilient and they're sticky, then the CAD will continue on the strong trajectory. It would take some very heavy downside surprises in the local data to derail the strength of the CAD due to other factors providing, the basically strength right now for the CAD. I remain bullish on the CAD, and I look to long it against weaker currencies like euro, pound, JPY as well. I've explained why JPY is, is not strong at the moment, as even if it is a safe haven. So euro card I've talked already, GBP card I've talked already. Let's see what you guys talking. Okay, so yes, you already shared the prime market. Lawrence, CAD is very resilient. Yeah, definitely. AUD USD. We're going to talk about AUD after the CHF. So CHF is next. No, let's talk about CHF first. Okay. So the franc has seen an increase in money flow due to the status of safe haven currency, right? As well, I've mentioned already, is the best performing currency last week. So I guess we can see this continue for this week, even more if we see the war increasing into the week ahead, and probably it will. It's set to increase, and Israel already said there's no comeback. We're gonna go. We're gonna send all those soldiers towards the war. They haven't done it yet. Well, of course, but once it's done, then CHF will be even more stronger than it is right now. Okay, and the tension is building and building. It is sort of helping CHF. So it's likely. Anyways, so this is my take on CHF. Overall, domestic data from Switzerland is not showing any signs of strength at this point. So the only reasons to be considering the franc for long positions will be based on market risk sentiment and the money flow. Looking, to pair against AUD or NZD, even JPY seems favorable in these conditions. Overall, I'm sort of bullish on CHF, and I do expect further strength in the coming weeks and months ahead. If the war gets extended, then it would be very good for CHF. Okay, so CHF JPY, AUD CHF, any other weaker currencies as well as NZD CHF. All right, let's talk about AUD now. Okay. AUD USD. Where is it? AUD USD. Well, it should be somewhere here. Well, it's not. Oh, here. There we go. Let me clean this. Ooh, no, not like that. Like that. Okay. 4 hours. Right. I had. Who was it? Let me log in here. Let me log in here so you guys can have a look. I think it was. It was Westpac. Yeah, I think it was Westpac. They are short on. Yeah, this one. AUD. Yeah, all right. So let's have a look on here pretty quick. We got some time yet. AUD here. So near term, there may be an extension towards the May low of is it? What's that? Oh no, that's not what I want. Oh, here. AUD USD, we will still be sensitive to US CPI, so definitely higher than expected, so good for US dollar. Any notable downside surprise could see a probe above the 0.65, but the 0.65 handle has proven very difficult to sustain over the past 2 months, and we expect this to remain the case for now, given the resilience of the US economy. So if we come here to AUD/USD, they are sort of 0.65 looking as a very strong resistance, and they don't think that the price will, come any higher than that. And they've stated somewhere here, solid AUD/USD, some glimmers of hope on China's story near term, but the 0.65 handle has proven very difficult to sustain over the past 2 months. They've said somewhere else, I want to share with you guys the target. I just can't find it now. I hate when this happens. It's too much information on my little brain. Anyways, you guys will have to believe me. But they had a target at 162 for AUD/USD. Okay, so they're looking to short AUD against USD. That's a good point. Maybe somewhere here, when we have this resistance area here, would be good to short, but then you have to check your risk reward where you're going to place your stop loss, as we have a target 0.62. Anyways, let's talk about fundamentals on AUD. So the Australian dollar underperformed last week against most currencies. The shift in the market sentiment quickly eroded the value of the AUD as the investors solved the havens such as the US dollar. We can see this backdrop here and backdrop here. Someone sent a message. Target is where I'm looking at. Yeah, that's good, man. That's really good. So from domestic standpoint, the data in Australia is rather resilient and is likely to lead to a faster than most recovery from this global contraction period. So this week ahead, we will get insights. We had insights towards this morning on the RBA. I haven't had time to read this yet. So it's pretty good. The minutes from last meeting, the policy meeting minutes released this morning. Sorry, it brought some kind of strength, as we can see on the 1 hour here. It brought some kind of strength, this 1 hour candle. Okay, but nothing to keep the market too crazy. We have to see how the market will react on the US opening tonight. As well, employment data on Thursday. It's likely to be a catalyst for movement. However, we must also assess the risk sentiment on Thursday, because something may happen on the war and this and that. Overall, I hold a short, a bearish instance on the Australian dollar, and I'm most likely to see, those sort of, I would say, pullbacks somewhere around here, and then I would look to short. That's my take. But the only currency I would, and as well, not only me, but MUFG had a long position here. So if we have a look on MUFG report, they've done a really nice report. That was this one here. They have a long position on AUD and ZD. It's not this one. Is it this one or this one? I think it's this one. Let me check for you guys. No, it's this one here. I've read it today. Come on. Jesus Christ. Anyways, you guys will have to believe me again. So they have a long position on AUD and ZD. I think they've entered at 1065, if I'm not wrong, or 1068, somewhere around here, and they are targeting 1088. Okay, yeah, it's not going to work. Very good. Anyways, so they are long on AUD and short on NZD, so they've longed AUD and NZD. But pretty much, against stronger currencies, I would be looking like to short AUD as a more bearish on the Australian dollar at the moment. I don't see any further resilience towards this data. But that's pretty much it. Well, it's not loading, guys. Sorry. Anyways, let's move on. Let's go for New Zealand dollar right now. Where is it? NZD USD. There we go. I tried to show you guys later on, so we finish. Okay, NZD USD. Well, I don't trade much Asian currencies, but Oceania currencies. The NZD had a broad week last week, declining against all major currencies, as we can see. But this was based off poor domestic data and the shift as well to risk-off sentiment in the market because of Israel tensions getting higher and higher. After a few weeks of strong retracements on the New Zealand dollar, it seems that we have reached a turning point, and where we're looking to short the NZD against the stronger currencies. It's a very good option, especially against the US dollar, the CAD, and the CHF. Okay, AUD NZD long. Oh yeah, that's a good one. Good one. Yeah. So that's pretty much it, guys. I don't have much here to share on my side. So let me have a look on the questions now. Someone have a question on the natural gas. And what else? On gold, right? So let's talk about gold pretty quick. Gold. Yeah. I would love to give you a target on gold, but I'm not a commodity trader, so I can't help you with that. I can see if any institutions has anyways. But yeah, man, look, what can I say? It's a safe haven. It's towards war. If it gets increased even more, then gonna get higher and higher. So I'm not looking to short gold. That's my take. Okay, pretty simple, I would say. Next would be the gas. Well, I don't trade gas, so I can't help you with that. Pui Hong. But natural gas is a very a very hard market. So hopefully I can find you an answer soon, and I can answer you in the next webinar. But I don't have any answers for you right now. I hold a neutral view. But I guess we can have higher prices on natural gas because of the war. So that's pretty much what I can say. I don't like to say you anything that I don't know. Okay. Any more questions, guys? Why you could open oh yeah, can open now. Here we go. Yeah, there we are. That's the position they hold. 068, target 83, stop loss of 06. Okay, so that's the trade from Mufji. Very nice trade. Worked pretty well. Thank you so much, man. We need more YouTube videos though. Much value each day. Maybe a Discord in the future. Yeah, man, that would be good. That would be good. But unfortunately, I can't do much, man. But that's yeah, that's all. Well, I've talked about gold. I'm long on gold, so I don't have any target on gold. But with Israel and all of those things happening, if it gets more and more intense, then definitely gold will go higher and higher and higher. It's a safe haven. So look for gold as a long-term investment. Don't look to get day trading. Don't look like those things. All right. I know gold is tempting because it's a very high leverage. Like you go for 0.001, you get $20 like that. But just be careful, guys, because think about long term. I'm not here to protect you. I'm not here to tell you what to do. I'm not here to make you feel bad. I'm just here to, tell you a professional way of how to trade. And definitely, yeah. Anyways, so all right, guys. Have everyone a good thanks, man. Thank you. Very nice to read those comments. You appreciate it. See you all next week, and trade safe, guys, and careful. Watch the war, watch US data, pound data, and do a lot of reading this week. All right. See you all next week. Bye bye.